Hey, this is Justin with DayTradeTheMarkets.com on Thursday, June 20th. Really a wild day with sell-offs in it seemingly every market today. Really a good day a lot of opportunity to trade. And I wanted to look at something a little bit differently. Normally we look at mainly day trading opportunities, and we tend to stay focused on the index markets like the E-mini S&P and that sort of thing. And there was some really good opportunity and really good ways of making sense of the ES today. And we actually did a live member webinar this morning. If anyone's interested in seeing that, I can certainly send you the recording on that. Just send us an email at info@daytradethemarkets.com. But wanted to talk about the gold market and talk a little bit about some swing trading ideas in general as well, because I know there are some people that don't necessarily have the time or inclination to be day traders, but like to be more swing traders. And gold obviously had a very interesting sell-off. I think it was down 6.5–7%, and it's been just selling off like mad. So this is a 15-minute chart looking at here, and I want to break that down a little more in just a moment. But again, this is the gold market, and this is a 15-minute chart, 24-hour session. But before I do that, we like to talk about a little bit bigger picture context, and it's interesting what you can see if you just look at it daily. And this is a daily chart of gold going back to last fall. Okay, it has no indicators on it. It's just a simple candlestick chart with the daily price with just the day session on here. Okay, and so what is interesting obviously is in a couple months ago we had the big sell-off. We were down more than 10% over a couple different days, and we had kind of been stabilizing over the last month and a half in this zone here. And then in the overnight session last night, which I want to show more of, we really sold off. And just as an aside, what we like to do is on a daily chart, just as the most simple way of looking at it is, first of all, if you can stand across the room and look at a daily chart and see which direction it's going, which in this case is pretty clear, that's a pretty good indication of your bigger picture bias, obviously. But another way to do it is just to take a simple daily chart and to look at the unfilled gaps. Okay, so let me pause this real quick. And what I've done is I've just kind of drawn the unfilled gaps in here in the market. And it's pretty clear to see when you look at it this way, we're on the south side of a lot of these gaps. We're not on the north side or the upside of any of these gaps. So that's another, kind of clear sign, just as kind of a layman's way of looking at the bigger picture bias. And obviously today, or last night into today, we have a pretty huge gap in gold. And so obviously, heading in, if you're a swing trader, you're looking to take some positions on the short side. So one of the swing trading charts that I like to look at, and also just one of the charts I like to look at in my day trading to kind of give me a better feel, is a simple 15-minute chart. Okay, and that's what we have here, and you can see, and this has got the 24-hour session. It's not, so in other words, here is Wednesday's day session. Here is Thursday's overnight, and then Thursday's day session. We started selling off. Here is the overnight yesterday, and then today, which was kind of a choppy day. And now we've closed in gold, and now we've sold off another, $10 or so. Just since the close of the market. But looking at this, you're looking for reasons or ways to get short. Okay, in a swing trading basis, and it's obviously the filter is red, so that's fitting our bigger picture bias, which is down. And so there's a couple different setups I like to use in terms of swing trading. And again, number one is you don't want to just blindly take setups. We talk about this a lot, but you want to look for the setups that fit the context of what you're thinking. So obviously we're looking on the downside in gold, and so one of the first ways you can do it is just simply look to be a seller near resistance areas like we have here, these red zones. Okay, now a couple of these didn't even get touched because the market was so bearish, but you can see just again with the context of you want to be on the downside, even bigger picture, trying to get short along these areas of resistance certainly makes sense. Okay, and again we didn't get it there, but down here, and then again after the market closed here today, just any of those areas certainly makes sense. Another pretty clear way to do it, and it's even better when they line up, is the idea of what we call the level 3 retracement. And these dark pink or magenta bars are what we call level 3 or extreme selling aggression. Okay, that's when you see a level 3 selling bar, you know you need to pay attention. And our expectation, especially in a down bias, so context is important, is that the high of these level 3 bars, quote, should act as resistance. Okay, and whenever we see one of these, that's kind of our first expectation, is that the high should get tested, and we see if the high can hold. Okay, and so when you have a situation where the high of a level 3 bar actually coincides with a resistance area, it's all the better. It's that confluence type of an idea. Okay, so in here, right in here, so there's a lot of different ways to play that. That's kind of when things come together. Another way that I really like on really any time frame, this is one of my favorite ideas for a trade, as long as you have the context in your favor, is what I call the sweet spot. And that's when you have a situation where you have several level 3 bars in a row. And let me just kind of zoom in a little bit more. Now here is the Fed announcement yesterday on Wednesday, and you can see here we have several level 3 bars in a row. That's telling us that there is extreme selling coming into this market. So you look for the area where these level 3 bars kind of overlap, which is right in here, and that's kind of what I call the sweet spot, or an area that, and you can see on the next bar we tested there and then sold off. Here's another situation where you have 2 in a row. So where is the sweet spot? Where do they overlap? It's right there. Well, you can see on the next bar, that's right where we tested. Here's another one right here. That's where they overlap. Pretty good trade location to get short. Okay, so that's the idea. Now, if one of those fails, that's also giving you information as well. So that's kind of just 3 different ways to kind of. I guess the goal for this video was, number one, I wanted to look at the gold market because it was such a sell-off and it's so interesting, and whenever you get an extreme day, I think it's interesting to look at it. Number two, talk about swing trading kind of in general and some ideas and some concepts you can apply, and looking at how you kind of look at the daily chart for a bigger picture bias and then drill down, whether it's a 30-minute chart, a 15-minute chart, whatever the case may be, to look for some better opportunities for some swing trades. And then number three, look at some of these different setups that you can use, whether it's, again, in this case, selling at resistance, whether it's that sweet spot idea, whether it's the retracement idea at the high of these bars, whatever the case may be, or when they come together like that. That's just kind of what you're looking for some pretty high opportunity, good, low risk, good opportunity type swing trades. So again, this is, just talking more in generalities about swing trading, but that's something that I think is a good kind of formula to use for swing trading. So hopefully that was interesting and informative, and let us know if you have any questions about that. All right, talk to you soon.